Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be taking a look at fundamental analysis for novices, Redbook Index. Welcome to the educational video for novices on fundamental analysis. In this video, we will be discussing the Redbook Index. So what is the Redbook Index and how can we apply it to Forex trading? Successful traders keep a close eye on the economic calendar. They review it at least once a day. This is a typical calendar which is provided by most brokers. The information you are looking for is the type of economic event, the time of its scheduled release, which is usually subject to an embargo, and the impact that it's likely to have upon release. You'll also be looking at the previous weekly, monthly, quarterly, or annual release for this data, if applicable. You will be able to study the consensus value, which will be put together by economists and analysts, and whereby this is the figure which is generally expected by the market upon its release. Here we can see that on Tuesday the 9th of June at 13:55 BST, the Redbook Index year-on-year and month-on-month is scheduled for release. The Johnson's Redbook Index is a sales-weighted proprietary indicator as released by Redbook Research Incorporated in the United States since 1964. This indicator only applies to the US, where it represents the weekly, monthly, quarterly, and annual sales activity of 9,000 stores. The data is released every Tuesday at the same time to its subscribers via a conference call or email prior to its public release. The data forms 80% of the total data as collated in this sector and is officially released into the market by the US Department of Commerce. Although it is a private indicator, it is closely watched by traders on Wall Street, including the Forex community, because it identifies trends in the short to medium term relating to the retail sector. The stock market finds this information useful because it ranks retailers across categories including apparel, books, toys and hobbies, department stores, discount stores, footwear, furniture, drugstores, home improvements, home furnishers, electronics, jewelry, and sporting goods and miscellaneous. All traders recognize that it provides an advance warning of change in consumer spending that in turn affects the business growth in this sector and shows warning signs of inflation, fluctuations, and interest rates. How do we trade the Redbook Index? Information is provided on a percentage basis, and we can see that the previous figures for year-on-year and month-on-month were minus figures, and this is related to the coronavirus epidemic. If the actual numbers are released as a percentage in terms of worse than the previous numbers shown here, this would be considered to be bad for the US economy, and therefore bad or bearish for the US dollar. Conversely, should the numbers come in higher than the previous numbers, this would show a pickup in retail sales and continuing overall trend in the upturn of the US economy, which is filtering through at the moment, and therefore this would be a good or bullish sign for the US dollar. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.